welcome to PriceTarget Research. I'm John Lafferty. Our research briefs are short discussions of topics of investment interest, including our current ratings on stocks of interest, key analytical questions and techniques, and important alerts and events. So let's get started. In this research brief, we'll be taking a look at some key investment characteristics of an oil field drilling equipment manufacturer, Oceaneering International. Oceaneering's businesses involve subsea engineering and applied technology, engineered services and hardware. Customers include oil and gas companies, governmental agencies, aerospace companies, companies that are involved in marine engineering and the construction industry. Current investor concerns for Oceaneering involve the fact that the company and its peer group have done very poorly in recent years, largely because of the negative impact which fracking has had on oil prices. When oil prices were higher, demand for drilling equipment was robust, but after the several-year decline brought on by the fracking activity that has caused oil prices to fall, Oceaneering's markets have largely dried up. Before we get into Oceaneering, let's spend a minute on a key tool used in PriceTarget Research analyses, the quartile performance chart. The light blue bar reflects the range of corporate performance for a peer group. The top end of the bar is upper quartile, meaning a quarter of the companies perform at a level above that quartile. The line in the middle is median. That means half of the companies perform above that level, half below. And the bottom of the bar is lower quartile, meaning a quarter of the companies have performance on this measure below the lower quartile. The company that we would be doing research on is represented by the red diamond, and you can see in this example, it is comfortably into the upper quartile. So we'll be using this in some of the analyses that we're about to get into. It's usually a good idea when considering a company's investment attraction to start with its investment profile. In this case, these are investment characteristics for Oceaneering relative to the S&P 500. The red dot being Oceaneering, the blue dot being the range for the S&P. They're organized into four categories: valuation, there's three of them; growth, another three factors; profitability, two profitability measures; and finally, four risk-oriented measures. Taken together and focused on upper and lower quartile, we can begin to get an idea as to where Oceaneering stands out relative to the overall market. So I've circled here cases where Oceaneering's value is either upper or lower quartile relative to the S&P. You'll notice it has a very high PE ratio in this case because earnings are minimal at the moment given the serious erosion in profitability that's gone on for several years. Its growth over the last 4 or 5 years has been very poor and negative. You can see here the median for the S&P is positive. For Oceaneering, it's 25% a year down. Analysts do expect a rebound as we look forward. Whether that happens, obviously, will be a key test for the stock. And it's had very high earnings variability. This measure ranges from 0 to 100, 100 being earnings all over the place, 0 being a ruler stock. Beta coefficient, the stock has been much more volatile than the market. A 1.68 beta coefficient means it's 68% more volatile than the S&P. Financial strength rating, we have our own proprietary financial strength rating that ranges from 0 to 100. Oceaneering is in the lower quartile for the S&P, and its market cap is quite small. Notice also here one of the key questions: the expected profitability for Oceaneering is a total wild card. The forecast for earnings in the near term are for continuing losses. It's not clear when that situation will turn around or whether oil prices can rally significantly in the near to intermediate term. If we look at profitability, here in this case we're comparing Oceaneering versus its peer group, so the blue bars are other companies in the drilling equipment field. And you'll notice here that if we look at key factors, and let's focus on profit margin, Oceaneering currently has a negative pre-tax margin, meaning it's in a loss position. Its pre-tax return on assets is negative, and its return on equity is negative. This is and it's really lower quartile versus peers. A very precarious situation for the profitability. Growth isn't a lot better. Moderate longer-term growth, revenue per share over the last 10 years has been about 6% a year. Earnings have actually declined over that period, and the recent decline is hard to call it a decline, it's a collapse. Revenue is also, over the last 4 or 5 periods, collapsed. Asset growth, earnings growth. You'll notice here that we plot the consensus forecast. This is the average expected growth by all the analysts who follow the stock. And there is something of a resurgence being forecasted. Oceaneering's consensus growth rate well above the historical numbers. For PTR, we're more skeptical, kind of taking a show us attitude before we would expect to revise upwards a growth rate estimate. The current rating on the stock at 25 is F, our lowest rating. The stock went to D at the end of 2014 at a price of about $60. It's now currently 25. That is brought on by a timeliness rank, our power rating of 25, which measures how timely the stock is for purchase. The 25 means it's only more attractive than 25% of the database at the moment. And its appreciation potential, the change in the stock price if the stock were to go to intrinsic value, is only 17, meaning it's only more attractive than 17% of the database. So taken together, Oceaneering earns our lowest rating of F, and we would certainly avoid the stock. Stay away. So in summary, Oceaneering's investment profile: poor profitability, negative growth, higher risk, low valuation is a saving grace. But its wealth creation has been poor. We don't see any change in that. Earnings are declining while the consensus expects some recovery. The turnarounds like this are frequently very hard to forecast. And our value trend rating at F is the lowest. We would certainly avoid the stock. Well, that's it for this research brief. Until next time, you can follow us on the web at PriceTargetResearch.com, where you'll find comprehensive, timely research and ratings, weekly updates covering thousands of companies. See you on the next research brief.